Hi, it's Steve and Joe from Freshagenda. And Steve, we're back this week with a bit of an overview of our September quarter Global Dairy Directions report,
Yep.
Which is quite a meaty one this time. Went out to subscribers
This morning. The ink is still warm on.
That's right, it's hot off the press.
Screen.
That's right. And then, of course, a bit of a discussion about GDT, which was negative this time around, and then chart of the week.
Okay. So this is a tricky outlook. Not that anything's ever too complicated, but this one, the complexity is piling on. So overall, we've taken a more bearish tone in fundamentals. So fundamentals aren't a price forecast.
No.
Prices can and will vary from this. This is what we think the underlying weight of milk and product balances indicates for value going forward. Very important to understand that. But generally, we see more milk availability. We see more risks to the downside. So there's a shift there.
Yep.
On demand. That's right. And there's, you could say, and we use these words at the start of the document about the fact that, are we heading towards a perfect storm? You're seeing demand start to weaken just as milk starts to come back. But we're a long way from that because, while US is picking up speed and Europe is slightly building, a little faster than what we thought, and we're seeing more growth there, New Zealand is coming off quicker.
That's right. And obviously in the peak of the season, or what should be the peak of the season, it's a bit more material that New Zealand's coming off, isn't it?
That's right. It's slowing, as is the demand side for New Zealand, because China's not coming back anytime soon. We'll talk about that. So you can see the variables there. These are the things that have changed from last month, so quite a lot of moving parts. And we also had a fairly important update from the European, the EDA, European Dairy Association, which prints a set of inventory assessments. Now that goes back to June, but what it does tell us when you recalibrate for that, it gives you some indications of what happened to usage of product in that period. So that's also reset some of the outlook. So how we've gone about it, therefore, is to remind people early on that it's important to look at scenarios. There are important variables that do influence the outcome. These are taken from the front of the document. And highlighting there where we've got alternate scenarios for the key variables down the left-hand side. So it's important to look at these for both demand and supply. We've got two sets of these here that are fairly critical, and you can see the range there that's shown to the projected values in each case by small tweaks.
Yeah, but mostly you would say on the downward slope.
Well, we've seen extreme pricing. And naturally, it's got to undo.
Sure.
And we've got more milk coming and weaker demand, so that's naturally going to occur. If anyone's surprised about that, have a rethink.
Watch more of our videos.
Yeah. Okay. So that, cutely brings us to a GDT event, which is profoundly negative, not deeply negative, certainly bad for fats. But I think the fact that we again didn't see China come back as one of the highlights of this event. Just on the right hand side, just showing where product price movements were in the run up to this, mostly flat, I guess, in the run up.
I see you've got a little green arrow over on the side there, Steve, is that?
Yeah. So I had parked it there when I was doing the edits on this to start off with, but it is an interesting it just reminds us that we do have a green arrow. We haven't used him this time, but he's sitting over there on the sideline waiting.
Yeah, he has been used before. So very low demand meets seasonally higher volumes. That's really the story of this one.
That's right. And it's taken us back. So we've seen a retreat in prices, butter's back to where it was a year ago, under 5,000. Skim milk powder's about to the same, historical measure. And as you said, we've seen demand come off. The expectation was that whole milk powder would be a lot better than this. So the $300 undershoot against the C2 futures, which is one of the bigger ones we've seen, the bigger miss. We did have a few back in March when the rally wasn't as strong, and then it came off quickly, but that was pretty interesting. It's
a pretty big margin there.
So some demand. there wasn't much of it. So it was whole milk was probably did best in terms of the aggregate in the startup of this event. So we showed there the first 6 rounds.
Yes.
And the plot on the left-hand side puts price change and the ratio in those early rounds.
So we're at the lower end of that range.
And I had to move the words to the left-hand side of this chart because they've been on the right for a while because we've been mainly dealing with right-hand side.
Yeah.
Stronger demand, but not this time. Just looking at the full event track record here, you can see why we had a pretty sluggish event with whole milk powder. And skim milk powder kicked on a bit. It started off very weakly and fell away. It did extend, and there was therefore a smaller loss.
Yeah.
Butterfats were just terrible.
Ouch.
Yeah. Butter in particular, well down, even though we did see stronger involvement from Chinese buyers. There wasn't much from elsewhere. Onto some of the regional buying. There was an increased percentage of whole milk in terms of shares of the product sold, but in tonnes.
We're well shy, aren't we?
We are. It did rise again.
Yep.
As the offer volumes increased, but we're 25% lower year on year in the first. What are we? Probably 8 events in, 8 or 9 events in. It's the worst start ever that we've seen in terms of absolute volumes. Skim milk powder was a little bit better. In left-hand side, that's North Asia. On the right-hand side, we've got GDT buying by Southeast Asia, which is some of the good news in this.
Thank goodness for Southeast Asian buyers.
Yeah, so the best start in that region since 2014.
Wow.
More coming to GDT, and we're 82% higher year on year. Butter, again, as I said, China bought more, much more this time. We're 25% higher than a year ago. Best event seen in that region in a couple of years. You can see where that occurred with the blue line. And just a little reminder, the Middle East is in there buying up.
Yep.
So helping, and that's their biggest participation for some time. So interesting to see how that is being shared around. A couple of other interesting outtakes from GDT, just a bit of just some comparisons, just to remind us that the American market's there with a bit of spare product, and how GDT has the GDT cheddar, the young cheddar price, has been pulled back to reality. That started a few events ago, but with the US market still going sideways, and with building stocks, we'd expect to see that stay under pressure.
Sure.
Pulling cheddar down below 5,000 for the first time in a little while, or back to there for a little while, but it's probably got a little way to go. And that discount of on AMF has again been eroded.
Yeah, just with that big correction in butter, it's looking more like normal. Yeah. Interesting.
Chart of the week, Joe.
Chart of the week. Well,
this one?
We thought we'd have a little chat about what's happening with US milk growth, because obviously that has been the expectation and the hope, depending on which side of the ledger you're on, about a bit more milk supply hitting global markets. We were just in the US last week, Steve. We were at an ADPI dairy ingredients conference, and you'd have to say the mood was fairly gloomy, a fair bit of uncertainty about what's happening in terms of the market. And here we are having the signals to farmers around that Class 4, Class 3 pricing complex, that the margins are under a fair bit of pressure in the US at the moment.
Yeah, they are. And feed prices staying firm and annoyingly firm.
Yes.
Just got to drive a bit through California and you see why. It's incredibly dry in the western side of the country.
Yeah.
We project this out a bit based on where the forward prices for cheese, non-fat butter, and of course corn and other feeds. So it puts together a projected margin, and that's overlaid with our expected changes in milk year on year.
So it's not going to continue to go down based on those projections, Steve?
No, it has a little bit of a bobble.
Yeah.
This is something that updates daily based on futures prices, so it is pretty current.
And dynamic.
and very dynamic. But that growth expectation out there is largely in the maths because we're seeing more cow numbers come through, but
Sure.
yields might stay under pressure if that margin stays weaker.
Yeah, just with that feed.
So this is one of the scenarios we flashed up earlier,
Mm-hmm.
that if that margin pressure remains, we might see that growth taper off a bit quicker in
Sure.
the US. So that's another big one to watch.
Mm.
All right, good one. Okay, that's it from us. It's goodbye from me and goodbye from you.
And from him.
Yeah.
See you next time.
We'll see you next time. Bye-bye.